Welcome to Rujira. In this video, we'll show you how to create an automated trading strategy using Custom Concentrated Liquidity, or CCL. We start by opening the automated trading page. From here, you can create a new strategy or copy an existing one. Copying allows you to use another strategy's settings as a starting point. For this walkthrough, we'll create a new strategy with BTC and USDC so that we can configure every setting ourselves. First, select the BTC and USDC trading pair and then click Create Strategy. Rujira provides several presets to help you get started, offering wider, more conservative ranges or tighter, more aggressive ranges. For this example, however, we will configure the settings ourselves, assuming that Bitcoin remains relatively close to its current price for some time. First, we zoom out on the chart to better view the upper and lower boundaries in relation to the current price. We then set the upper price 20% above the current price and the lower price 10% below it. The selected range reflects our market view and determines how the assets within the strategy are distributed. If the Bitcoin price falls below the lower end of the range, the strategy will be entirely in BTC. If the price rises above the upper end, the strategy will be entirely in USDC. While the price remains within the selected range, its movements generates trading opportunities for the strategy. When the strategy trades in one direction, it captures half of the selected spread. If the market later reverses and the strategy trades back, it captures the other half. This means yield can be generated with each trade even before a complete round trip takes place. Next, we set our spread. The spread is the target price difference between selling an asset and buying the same amount back during a completed round trip. A larger spread targets more profit per completed round trip, but requires greater price movement. A smaller spread may complete trades more frequently when volatility is lower. Because BTC is a volatile asset, we'll change the spread to 0.4%, which allows for slightly wider price movements between completed trades than the default setting. Next, we set our reward strategy. The reward strategy determines whether trading profits are reinvested through auto-compounding or kept separately as claimable yield. With full auto-compounding, an APR cannot be calculated. When profits are split, the displayed APR only reflects the claimable portion and will therefore be lower. For this example, we select yielding, so the claimable yield and its APR are easier to track. After reviewing the range, spread, and reward strategy, we select how much BTC and USDC we want to provide. We use the slider to select an amount of BTC, but the selected amount exceeds our available BTC balance on Rujira. In this case, we press the Auto Fit button to adjust the required amounts to match the balances available in our Rujira wallet. When everything looks good, press Create Position and approve the transaction in your wallet. Your CCL strategy has been created and is now active. Depending on trading activity, check back later to see how the strategy is performing and track its APR. From an existing strategy, you can add more liquidity, withdraw liquidity, and withdraw accumulated profits. You can also consider creating several smaller strategies with different ranges or spreads. This can help you compare how different settings perform before deciding whether to add more liquidity. Results will vary depending on trading volume, volatility, market direction, and the parameters you select. You can monitor your automated trading strategies through Rujira Trade or from your portfolio. And that's how you create an automated trading strategy using Custom Concentrated Liquidity. Which pair will you choose to provide liquidity to and start earning with? Welcome to Rujira. Fair by design, owned by you.